Hey, good morning. Happy August 10th. A little later than I like to try to do these. I've said for a long time, I always try to shoot for 10 a.m. on Mondays, and lately most Mondays just don't even happen. I think 2 weeks ago I talked about, hey, come Monday, because there's a lot of stuff I want to share from a webinar that I sat in on, and then last Monday came and went, and all of last week absolutely blew up. So didn't do it. So we're gonna play a little catch up today. But as always, this is just my take on the question I get asked all the time is, hey Jeff, how's the market? I get asked that at least a dozen times a week. So this is just my weekly check-in of kind of what I'm seeing, what you need to know as it relates to the real estate market, and just kind of what's happening. So this is one of my favorite times of the month because last month's stats have come out. I've got a pretty slide for Portland, and then not so pretty one for Southwest Washington because I get these from somebody else and they haven't done Washington yet. So anyway, so how's the market? We're going to start with sort of kind of this local. So this is kind of Portland area. So average home price $632,500. It's up 1.7% from last year. It's the same month last year. Year to date, it's up a little. It's not up that much. So it's a pretty tepid, kind of a flat-ish market, right? Put a pin in that thought, right? Home prices, they're not rocketing up. They're not coming down either. It's holding pretty constant. 54 days on market. It was not that long ago. We were looking at 70s, 80s, 90s. So we're probably back to kind of a more normal run rate of, excuse me, times on the market. Homes sold, call it 2,200 homes sold last month, which is up 8% from last year. You see down 4.2% from the month prior. Yeah, forget about it. That's the monthly seasonality, right? July, you've got 4th of July weekend. People go out of town, so yeah, you're gonna have less stuff happening. But listings are down from last month, but they're up from prior year. So more inventory, right? The big question though becomes: do we have sort of a tier inventory or kind of B and C tier inventory? It's a mixed bag. It certainly kind of depends on what price point where you're looking, but there is more inventory. It perhaps could be a little tougher at times to find exactly what you're looking for, but there is more to choose from. Southwest Washington, here we come to a little bit of the eye chart. So the prices, the 636,000, it is up from last year. It's up on a year to date basis. I'm sorry, it's a little bit down from last year, up on a year to date basis. So if you're looking at sort of this static in time, price is a little softer. If you look at it kind of year to date on the whole, prices are still up. But yeah, listings are up, pendings are up, closes up. Everything is clicking and booming in Southwest Washington. But again, prices are holding largely static, up a little bit, kind of year to date, but year over year, kind of down a tick, which is sort of an interesting takeaway. So I think that sort of the year to date surge we've seen so far in Southwest Washington will kind of temper back down. And I think much like the Portland market, we're going to kind of see things ending up probably relatively flat and static for the year. So that's a real fast snapshot on how's the market. The market is good. It's showing a lot of vitality, a lot of health. Things are moving, things are selling. Prices are static, right? So if you're a home buyer, unfortunately, you're not seeing kind of a drop off in prices. But at the same time, you feel more safety in your asset acquisition strategy, if you will, knowing that maybe you are paying high prices. So you might want to think. But at least hey, we're not prices aren't tanking. So go back to say, Great Recession kind of time frame. I don't want to buy here because what if prices continue to drop? So people kind of waited and FOMO kicking in. Now you just sort of look at it like, the rates are what the rates are. We'll come back to that. The prices kind of are what they are, but they're holding in steady. So it's not a lot of downside kind of peeking its head out in the market right now. It's more so making me curious or maybe a tad nervous for if or when rates do come down significantly. I feel like there's just dramatic upside on prices. So with that, 2 weeks ago, I sat in on a webinar kind of talking about sort of forward-looking projections and expectations within the market. These are so all your national economists and experts and everyone else kind of opining on where they think the market is headed. And there's just a lot of snippets I just kind of wanted to share, right? So they were saying this is going to be on a national basis, right? You've got inflation, uncertainty, right? We got a Iran war, we got all kinds of craziness going on. The housing market is just resilient, right? So this is not a Portland or Southwest Washington thing. Prices are holding in steady across the country, right? We are not seeing a big softening. You'll see people on Twitter, wherever else saying, "Oh, look for a 20% drop in home values." It's just not coming, right? This is pure rage bait. They're looking at dramatic headlines, get clicks and attention. There's nothing in there statistically that says that's happening or even coming, right? So far, so good, essentially, is what's happening. The market is resilient. Now, mortgage rates kind of was the big thing. Everyone's like, when are rates coming down? When are rates going to drop? I'm sure, my primary mortgage guy, Rob, probably gets hammered at this question all the time. Hey, Rob, how are rates? When are rates coming down? And all the forecasts right now saying remain in that 6% range through 2028. So kind of the takeaway message here is six is kind of the new normal, right? So it's, I know we've got a generation of buyers who look at race and think 6% is highway robbery. Because I remember not that long ago, or you got people like me, or lots of us like, hey, well, my house is at 2.5%, 2%, 3%, and that's great, but that's just not really a thing anymore. That was sort of a snippet in time. If we go back, this goes back to like to the 70s or 60s on mortgage rates. It goes as high as call it 19%, and you kind of see where we're at now, sort of on that far right. We're in that sort of 6% range. So look back over the past 50 years. Six is not out of the norm, right? We had a little period of time where it artificially was pushed down due to a global pandemic and trying to re-stimulate, a global economy. And I think that's going to prove to be kind of a once in a lifetime thing. I don't think we see that coming back. Rates could get into the fives later, maybe. But I've also heard, excuse me, my throat this morning. I've also heard experts talking about when rates hit a 5.75 or lower, it's on, man. It's that's we're look for the market to go nuts, and by nuts it means activity picking up, competition picking up, and thus prices stratospheric again. So God help us all. So then they kind of went through sort of the psychology, I guess, on the selling side of when people are selling homes. Kind of what do you think is going to happen? And it's 83% of sellers think that they're going to get more than their asking price. 12%, think I'll probably get less. And I love that you got 5%. Like, I don't know. It's probably the most honest slice of the pie right there. What's going to happen when you list your home? Hell, I don't know. Let's see what happens. But 83% thinking that they're going to get bid up and over. Probably delusional in this market. Maybe there's some micro markets across the country where that's still absolutely a thing. Maybe. It sounds like the New England markets are still a little bit more fever pitch, but around here, no, it's not really a thing. I think more expectations here are price the home right, price it accurately, price it competitively, market the home well, and if it's that top tier A home, you probably sell opening weekend. You may go a little bit over, but you're not going to go dramatic. Don't look for that 20% over like we saw a few years ago. That's done. But it's all about kind of those expectations. The interesting piece that they showed is what homes are selling for less than list price. And this goes back to 2018. So before the big run up, 62% of homes back in 2018 saw some degree of a price reduction before their home sold, right? It kind of ticked up. And then obviously when the market went absolutely crazy, dropped down to 38%, 42%, which that number even surprised me, right? Back because it was such a fever pitch market. I didn't think anybody was going below market, below list price, but hey, here we are. They absolutely did. So fast forward now, the other comment I get a lot from people is, hey, how's the market? Because if I go on Zillow, Redfin, Realtor, whatever, I see a lot of price reduction. So it tells me the market must be terrible. It's like, well, no, about 62% of homes are having a little bit of a price adjustment before that buyer steps in and says, all right, that's the price I'm willing to pay. But if you look at 62% back prior to kind of the craziness, it's on par. So is the market any worse than it used to be? No. We just got spoiled by, 8 to 10 years of craziness. So we're really kind of back to a more normalcy in the market. It's just normalcy that we're not used to. And for a generation of buyers, they've never seen it. So it's going to take a little bit of kind of getting used to. So then they look at, okay, the next question, obviously, what are prices going to do? What do you think? And this is pure crystal ball stuff, right? So who the hell knows? But you see this kind of forecast, right? 1.7% for this year. Portland Metro, Portland, Southwest Washington, 1.7, year over year growth. I don't think we're going to be quite there because everything seems to be a little bit more static right now, but we'll see what happens. But either way, 1.7, that's pretty minor. But then 2%, 2.8, 3.1, 3.9. Essentially, it doesn't matter what the numbers are. If that trend is a universal across all markets, it does show a recovering base of activity, interest, demand versus supply, and so forth, right? So what are prices going to be doing as we look going forward? They're going up. What are mortgage rates doing? Staying the same, at least through the first three bars of this chart. They're going to stay in the sixes. Beyond that, who knows, right? Maybe they're in the fives, maybe they're in the sevens. God help us if they're in the sevens. But um, but that case in point, this sort of goes back to that notion. I've talked about this in the past of I'm going to wait for rates to drop before I buy. Well, it may be 3 years before rates drop to levels that you want, but meanwhile, your home prices is up 1.7 to 2.8. You're paying a lot more for the house, so you're gonna to try to save maybe $100 a month on your mortgage. You're gonna end up costing yourself maybe 30 grand extra on home price. It's bad math where I come from, but that's just the way I look at it. Everybody's got to do what feels right for them. And then lastly, as it kind of relates to sort of the health of the market, are things bad? Are they catastrophic? Is there going to be a big collapse in home prices? What's going to force a sort of this significant drop in home values? And this is when people talk about, hey, I'm going to see a 20% drop in prices or 30% or this catastrophic kind of thing like we saw, 15 years ago. What's going to cause that is going to be a surge of foreclosures. So where are we at with foreclosures? All the way to the right. They're not there. They're absolutely not there. You see a period where they're almost they were zero for a brief period, and that's when you had the ban on basically foreclosures during COVID. But so foreclosures are, even if you go back prior to all the insanity, it's still even less than sort of that normal run rate from before. So, and a lot of that's going to be based on the fact that you've got so many homes out there with 2, 3, 3.25% mortgage rates. So you lose your job, things go crazy. It's fine. My mortgage is so cheap at this point. It's not a forced sale, or my values come up so high since then. I don't have to foreclose. I'll just sell the house. I've got so much equity in this thing. It's all good. Case in point, now you bring this all together. Foreclosures are not happening, so we have nothing that's going to push a drop in prices. In fact, they expect prices to go up. They think mortgage rates are going to stay flat. And so far in your local market, we're seeing things improving and holding in pretty steady despite what's going on around us. So, in the short term, long term, it's the same message. If life has pushed you and you need a new home, whether what's the 5 Ds of real estate. I'm going to stutter to get them all now, but it's death, diplomas, diapers, divorce, and downsizing, I think. And there's another one. I don't remember what the other one is, but essentially what you hear me say is life happens. So when life happens, you can either kind of sit and wait and hope things get better, or man, life happens, man. Let's just go. And this is absolutely that market of let's go, right? In some cases, you don't have a choice, right? I guess if you die, you can't really choose that one. Divorce, it's going to happen. So yeah, you got to sell the house. You got to do what you got to do. But you're having kids. You want to have kids. Waiting is not going to be the right play. It's just going to cost you money. Diplomas, you can kind of hold off for a little bit. Or downside, you can wait if you want, but it's just not that market, right? This is the time to kind of just keep things going, because I think what you don't have coming up in the future is a decline making things way better. I think what you have is that risk of prices and such just kind of going nuts, which costs you if you wait, because then you got to pay those higher prices. Versus I've gotten home now, and now that run up in value, that's mine. That's my newfound equity. That's my wealth. That's from my family. So how's the market? Market's pretty good. Getting better. Could always be better, but yeah, the market's doing well. Appreciate you watching these things. Like always, if you have questions, shoot me a text or shoot me a DM. I love talking about this stuff. A few of you guys text me, stuff fairly regularly, or make comments and stuff, and I do squirrel those away and try to figure out. Can I put that in a newsletter? Can I put it in the next video I do? So yeah, if you have anything, shoot me a note and just let me know. And otherwise, yeah, like always, thanks for watching these things. I know I just geek out on the data and stuff, so I appreciate you humoring me as a recovering CFO. I like to go back to my roots from time to time, but yeah. All right, beautiful skies out. It's going to be a great week. Smoke is gone, thank God. Have a good week. Thanks for watching. See you next time.